Hey guys, how's it going? So Genius Brands is exploding on YouTube lately, and they are also launching their network on June 15th. And I'm hoping that, a lot of people watch my video, a lot of people research my video, search my video on YouTube, and I'm hoping I show up under people's radars because I'm hoping to, I want to grow my channel, and Genius Brands is very popular right now. In this video, I'm going to show you my research on Genius Brand. I'm not here to be a bear or bull on the stock. And if the stock somehow does crash, I might pick up some shares as a speculative long-term play. But right now, I think the company, just from a market evaluation, is kind of overvalued, and I think the stock price should go down a little bit. But again, that's my opinion. So so they are launching on June 15th their network. I don't know, usually people would say sell the news event, but I don't know, maybe this is a different story, and when they do launch this network, there's going to be a lot of interest, and the stock could explode to the upside. I have no idea, but I know that if the stock does explode, short sellers are going to come in and try to short this stock and capitalize on the stock going down in the short term, because what goes up eventually goes down. That's how the stock market works. Nothing ever goes up in a straight line and continues to go up in a straight line without having a big pullback. So there's always going to be short sellers attacking this company. It's something that you're going to have to live with if you are investing in this company. You're going to have to deal with shorts coming in, calling this thing overvalued, which, in my opinion, just looking at the balance sheet, it does look very overvalued. But Jim Cramer came on and they said that, Genius Brand has some very smart people in it. Management, I don't disagree with the management. Yes, there is some extremely smart management on Genius Brands right now, but you also gotta remember that it has gone up 3,000%, but pulled back, so it's up roughly 1,000% from its lows of around roughly 20 cents. So you also have to take that into account when you are investing into this company. But if you are one of those investors that invested into this company at 30 cents, I say just hold on to it, because you never know. You could get lucky. Genius Brand could be worth billions and billions and billions of dollars in the future, maybe tens of billions of dollars if management can execute right. I mean, I'm not saying now, I'm saying possibly in 2 or 3 years down the road, that could be a possibility. And, but again, it's also very, very risky at the same time, in my opinion. So let's move forward. So if you are new, if you ran across my channel and you never heard me before, I would appreciate a subscribe. Even if you never watch a single piece of content on my video again, just please subscribe to my channel. I'm hoping to get 100,000 subscribers sometime in the future. I will never stop making YouTube videos, so I will be around for years and years until I die or something bad happens to me that will enables me to not make YouTube videos anymore. But one day, my life goal is to get that 100,000 subscribers. So Genius Brands launches new cartoon networks Monday, June 15th, over to 100 million television and 200 mobile devices with over 4,000 episodes, family-friendly content. So on the Monday's trading day, either this stock is going to skyrocket from them launching their new network, or it's going to tank from sell the news event. I don't know. At the end of the day, we'll see what happens in pre-market. We'll see what happens on Monday. I will make a video update on Monday when this thing launches, so prepare for that tomorrow. So this is really concerning to me that Genius Brand had raised a lot of money at very, very cheap prices. So on May 7th, 2020, Genius Brand raised $2.8 million at 35 cents per share. That means that for 8 million shares, so the 8 million shares of its common stock purchased at 35 cents, that means that there's some people in that's going to be making mad money off this. Mad money. And who's going to be the sacrifice? Retail investors slash maybe even some rich people that are pumping the stock at the moment. And then again, after they raised it on, again, after that, on May 13th, just 5 days after, they raised another 5.4 million shares, issuing to common stock. There is no price on this one. There is no price at what they raised it at. But if we look at May 8th, the stock was trading at 58 cents. They raised it at 35 cents. And we look at May 13th, the stock was trading at $1.31. So I'm thinking that this raise would probably be roughly $1 for $5.4 million. And then again, right after that, another 5 days later, they raised another $9 million at $1.20. So they are diluting shareholders at such a cheap evaluation, like a extremely cheap evaluation, and yet there are so many people bullish on this. If you're bullish on this, you are basically transferring your wealth to these guys that bought at dirt cheap prices. That's why I'm telling people to have full caution on this, because Genius Brand, in like literally a couple weeks, Genius Brand diluted shareholders big time at a very, very, very cheap evaluation, at very, very cheap prices. So that's why. And then, so if Genius Brand suddenly goes to like $100, these guys are going to be making mad money. I mean, it's not going to go to $100 because that just makes absolutely no sense. But if it goes to $10, these guys who bought it at 35 cents literally made 4,000% return on investment in a short amount of time. These guys probably got it way under $1, so probably like 80 cents. So they probably made 2,000%, and these guys who bought it at $1.20 will be making at least 1,000% return on investment. So there's a lot of money. There's a lot of people who raise money at cheap prices are gonna make tons and tons of money off Genius Brands if the stock explodes to the upside, if rich people slash retail investors pump their life savings into Genius Brand because they think it's going to be the next Netflix. But you gotta remember, they are not doing a Netflix model. They are not setting up their own network. They are selling to other networks. They're selling to Amazon Prime. They're selling to Netflix. They're selling, and they are making money through ad revenue, through selling ad revenues to kids. So, I mean, ad revenues to kids, kids don't have that much money. I get it. Their parents have money. So, they'll go to their parents. I want to buy this. I want to buy that. So, I guess in a sense, advertisers will pay, it's a little bit of a premium for that because they know kids don't have money, but they have parents who have money, and parents have to buy their kids stuff once in a while. Can't just be 100% cheap with their kids. So yeah, I think maybe that advertisement, they might get some money off advertisement. It also depends on if kids are watching a lot of these cartoon shows too. So long term, like 5 years down the road, maybe this could be a really big winner. But maybe not even 5 years down the road, maybe a year down the road. But short term, we could see this thing decline. So just be careful and realize that the higher this thing goes, the higher Genius Brand stock goes, the higher Genius Brand stock goes, the more short sellers are gonna attack it because they'll say it's overvalued, which I cannot argue with. It is, if you look from a balance sheet perspective, this thing is extremely overvalued. $400 million market cap, and if it goes to $10, it would be $1 billion market cap. So yeah, and then another thing I kind of found out too when I was looking at the 10K, as of March 29, 2020, the number of shares common stock outstanding was almost 30 million shares. Right now, where is the common stock shares at? 96 million outstanding shares. So they basically increased their float 3x in a matter of a couple of months. Wow, that's a lot of common shares increase in a couple months. Obviously, the company is diluting heavily, which, you know, gives them a lot of cash, but they're diluting at like ridiculous evaluations, ridiculous prices, like 35 cents, $1.20, possibly even $1. So yeah, this to me that is a huge red flag. And now let's just look at the balance sheet. I mean, yes, their cash position has increased dramatically. I think it's sitting at $45 million right now. But if we take just, you know, their cash with their total current asset, this will give them roughly around $65 million, giving them a shareholder equity of around, you know, $50 million. So they have a shareholder equity of $50 million, and they have a market cap of $400 million. And if the stock price keeps going up to like $10, I'll give them $1 billion of evaluation for a company that has $50 million of shareholder equity. And then if we further look down, for the full year of December 31st, 2019, they made a total of $6 million of revenue. Sure, it's a huge increase from December 31st, from a year ago. It is a huge increase in revenue, and it comes mostly from television and home entertainment. And I'm betting that in 2020, this will increase another dramatically. I say maybe $20 million for the full year, maybe more, maybe 30, maybe 40, maybe $50 million. But you know, after that, I mean, it might stabilize at $50 million. It stops. After a while, I think Genius Brand will stop becoming a growth company. Right now, they are considered a growth company, but I don't think they're going to be generating billions of dollars off of ad revenue. That's just my personal feeling. I mean, I can see the total revenue being around $50 million at best, but you also have to remember that they're also losing a ton of money. They lost a total of they lost $6.5 million from operational, and then the total loss to common shareholders is about $50 million. So, you know, that's concerning to me. That's a big concern. So, yeah. Anyways, that's it for my Genius Brand videos. The next part I'm going to be talking about is GameStop. So Sony came out with a PlayStation 5 digital and a PlayStation 5 regular. I don't like this digital thing. I mean, it makes sense. Sony doesn't want to share their revenue with GameStop or anyone else. They just basically want people to basically buy online because Sony gets a lot of money. Every time you buy something online from Sony, they get 30% profit. They get 30% profit from the total sale. So if you bought an item that's $100, Sony gets $30. Well, there's no games that really 100. It's like $60, but you get the point. 100 just sounds better. It's easier to do the math in my head. But if let's say GameStop sold an item for $100, GameStop would get 15%, and Sony would get 15%. So, you know, that's why Sony wants to do a digital version. They want people to buy online. They don't want people to buy at other places. And this will hurt GameStop in the long term. Short term, GameStop's going to benefit from these console launches simply because people are going to want to buy more controllers. People want to buy payment protection plans for their new consoles and controllers. And people are going to be trading in their games and old consoles, and GameStop's going to be benefiting from these trades in. in a big way. So short term, I think GameStop's gonna benefit big time from the console launch, but long term, this PS5 digital is going to hurt GameStop in a big way, in my opinion. So right now, like, if we look at Genius Brands, $400 million versus GameStop sitting at $305 million, GameStop obviously is undervalued. They have more cash than the entire market cap, twice as much. They have $600 million of cash, and they have a $305 million market cap, which, I mean, just looking from a balance sheet perspective, GameStop's undervalued. GameStop is probably going to be volatile, in my opinion. It's probably going to, if it drops down to $4, I think that's an opportunity for a swing trade, because it will probably bounce back when the pre-orders come out for the PlayStation 5 and the Xbox One, because, that's, GameStop is based on news. And then, you never know, right? Genius Brand, Hertz, they all got their stock pumped by retail investors / rich investors. You never know. GameStop could come out with some amazing news, some random amazing news, and right now, GameStop is extremely heavily shorted, 56.34 million shares shorted. So 87% of the float is shorted. So if a bunch of rich people / retail investors suddenly start buying into GameStop, we could see GameStop have an explosion, and we could see a short squeeze up to $10 or even $15 or even $20. So GameStop has huge potential. At $10, GameStop's only evaluated at $650 million, which is not even overvalued at all. At $20, they're evaluated at $1.3 billion. Again, not overvalued in my opinion. So I say $20 is a total possibility in the future, but it all depends on how management execute and how management can pull this off. Because right now they're trying to help. They're trying to get the stock price back up. But yeah, anyways, that's it for my video. Thanks for watching, guys. I hope you enjoyed it. Subscribe for future updates and have a great day. Bye.